Welcome back. Our next guest is Eric Pan. He's President and Chief Executive Officer of the Investment Company Institute. He'll give us some perspective on recent investing trends, recent regulatory initiatives in light of challenging times in the markets. Eric, thanks a lot for being here.
Well, thank you for having me.
Explain your organization, first of all, and what your mission is. We chatted a bit about it before we came on camera. You've been busy recently talking to people in the U.S., here in Canada, in Ontario, with the Ontario Securities Commission, and elsewhere around the world as well. What's your mission?
Sure. So ICI represents the asset management industry that serves individual investors. So think about all your retail products, mutual funds, ETFs, money market funds, and things like that. So we're based in Washington, but we also have an office in Brussels. So we deal quite a bit with not only the U.S. regulators and administration, but also international regulators as well, including here in Canada, as well as in Europe and in Asia.
Investors' love affair with ETFs seems not to be slowing down at all. It's been many, many years now where we seem to see greater and greater inflows into ETFs. Why do retail investors like those funds so much?
I think they like ETFs because low cost, they're transparent, easy to use, and in some places like the United States, there's a tax advantage to using ETFs. But to your point, back in 2011, maybe 10% of American investors had ETFs.
Right.
Today, 45% of them do.
Right.
Tremendous increase.
What has happened to the mutual fund industry in countries where the ETFs have boomed?
Well, so I think mutual funds are feeling the pressure. Mutual funds have not disappeared. In fact, they remain as large as they once were before. But undoubtedly, ETFs are taking more and more of the market share.
What can you tell us about your conversations with Canadian regulators?
I think Canadian regulators, just like their counterparts in the United States and in Europe, are very focused on how to get Canadian households to be investing in the capital markets. Mm-hmm. Countries around the world have a problem where a lot of people are parking their money in bank accounts. What we want them to do is put the money into debt and equity securities. Mm-hmm. That funds Canadian company investments, startup companies, mm-hmm. and therefore growth.
Mm-hmm. I often have casual conversations with people about the markets. They don't know very much about markets. They're afraid of market risk. And I try to tell them that you can mitigate market risk. And one way you can do that is diversification, one of the big principles of successful investing. And one way that an ordinary beginner investor can achieve instant diversification is through the purchase of an ETF.
Well, I couldn't have said it better myself. Definitely, ETFs began as great products to do passive index investing. But I would note that the hottest trend in ETFs are what we call active ETFs.
Right. And what are some of the strategies there? There's quantitative strategies, there's screening ETFs.
So active ETFs basically apply active management principles to the ETF wrapper. And they follow a variety of strategies. The important thing is investors get to pick what strategy they would like to follow, and their choice everywhere.
What kind of conversations have you had with the new administration in the U.S.?
So definitely a lot of change in Washington. I don't need to tell people here in Canada about the change. But this is an administration that is very much focused on pro-growth policies. Mm-hmm. And one of the key messages we've been telling the Trump administration is President Trump won the election because he tapped into a feeling that the American economy was not serving all American investors. And here, by encouraging them to make more money in the markets, invest more money, that this is a way he can actually fulfill one of his major campaign promises.
What is your view of the perception that the Trump administration sees the stock market as a barometer of its success?
I think the administration sees a lot of barometers. Mm-hmm. Obviously, in the past couple of weeks, the stock market has not been the best barometer. Mm-hmm. But in my conversations with administration officials, I know they're focused on long-term trends. And I think what they're interested in is, as we approach the midterm elections in 2 years, how's the market doing then?